Space used to be the realm of governments and astronauts, but today, private companies are launching satellites, space tourism is inching closer to reality, and the space economy is expected to be worth over $1 trillion by 2040. With this new frontier comes new risks, and insurance has a critical role to play. Let's break down what space and satellite insurance is, why it matters, and how it could shape the future of our global economy. First, what is space and satellite insurance? It's a form of highly specialized property and casualty insurance that covers satellites, launch vehicles, and space operations. These policies cover the risks of pre-launch, launch, and in-orbit operations. Coverage is also available for liability in the event of damage to third parties, such as falling debris or orbital collisions. The two most common products are launch insurance and in-orbit insurance. Launch insurance covers the vehicle and payload during the launch phase, which is one of the riskiest moments. If the rocket explodes or the satellite fails to reach orbit, the policy pays out. In-orbit insurance protects the satellite once it's operational. It covers malfunctions, power system failures, or collisions with space debris, events that could render a satellite completely useless. Now, why is this important? Satellites support GPS, telecommunications, national security, climate monitoring, and even agriculture. As more of our infrastructure depends on space-based systems, the financial consequences of failure become enormous. Space insurance also fuels innovation. By de-risking high-value projects, insurers make it easier for companies to secure funding, test new technology, and bring products to market. Whether it's Starlink building a global internet network, or companies launching Earth observation satellites to track crop health or carbon emissions, insurance is the financial backstop that keeps these missions viable. But this industry isn't without challenges. Space is risky, and insurance capacity is limited. A single launch can cost hundreds of millions of dollars, and few underwriters specialize in these complex risks. Underwriting space policies requires deep technical expertise, access to launch and telemetry data, and the ability to model rare but catastrophic events. There's also a growing concern about space debris and orbital congestion. The more satellites we put into space, the greater the risk of collisions, malfunctions, or signal interference. And there are few international standards governing these risks, which makes liability and loss attribution difficult. Another challenge: lack of loss history. Unlike home or auto insurance, the sample size for satellite failures is small. That makes pricing risk much harder and could push insurers to raise premiums or tighten terms unless modeling improves. So, what does the future look like? Expect more parametric insurance products to emerge. These pay out based on predefined triggers like launch failure or altitude deviation, rather than waiting for traditional claims investigations. Parametric products could improve speed and transparency in a complex environment. We may also see insurers partnering with satellite data firms to better monitor risk in real time. Think live tracking of satellite position, function, and exposure to space weather, giving underwriters the same kind of insight we already see in cyber or telematics-driven auto insurance. Finally, as the space economy grows, so too will the market for ancillary coverage, cyber insurance for satellite hacking, liability coverage for private space travel, and even life and health insurance for space tourism passengers. Space and satellite insurance is a tiny slice of the market today, but it could become one of the most critical enablers of the future economy. If you found this helpful, make sure to like the video, subscribe to InsurKnowledge, and follow for more insurance insights on the risks and trends shaping our world, from Earth to orbit and beyond.